Hi there. Thanks for tuning in for part 3 of our series on the world's strongest alcohol producer stocks. In this video, we are going to cover Pernod Ricard, the world's second largest spirits maker and one of the most diversified alcohol producers. First, our disclaimer. We are simply outlining our thoughts based on public available information. We are holding shares in the company and therefore might be biased. Historic data is no guarantee that they might apply to the future. Circumstances may change. The views are subject to change. You're responsible to do your own research and due diligence. Our video is in no circumstance to be regarded as investment advice or as a recommendation to invest. We exclude any liability. So without further ado, let's have a snapshot at Pernod Ricard. What we want is to have a look at what the company does and why it is interesting. I want to share with you some numbers, the dividend history, and the stock chart dynamics. We'll have a look at the long-term trend. Then finally the main takeaways. So Pernod Ricard owns 16 of the top 100 spirit brands. It has one of the most diversified and most comprehensive and prestigious portfolios in the alcohol sector. Just to name the most popular and most iconic brands in the Pernod Ricard portfolio, they include Havana Club Rum, Absolut Vodka, Martell Cognac, Jameson Irish Whiskey, Ricard Pastis. So the Pernod Ricard product range is very broad. It includes tequila, rum, vodka, liqueur, champagne, wine, gin, whiskey, scotch, pastis, but no beer. There's no focus on beer brands. Pernod Ricard has been created in 1975 through a merger between two rivaling alcohol producers called Pernod and Ricard. Ricard was founded in 1932 and was a very popular long drink or alcoholic cocktail maker. Then the other company, Pernod's history goes back even longer to 1797 when the Swiss founder Henry Louis Pernod established an absinthe distillery. So it's quite interesting. The history of these two combined businesses goes back quite a long time. As said, Pernod Ricard is the world's second largest spirits and wine organization after British giant Diageo. By the way, we made a video on Diageo and on Brown-Forman as well, so which are both competitors of Pernod Ricard. So if you are interested, you can check it out on our YouTube channel. So Pernod Ricard's portfolio comprises over 200 premium brands and with sales of around 10 billion US dollar annually and an operating income of roughly 1.8 billion, it's quite a sizable company. Just to put it into perspective, Diageo, the number one spirit maker in the world, makes around 14 billion in sales and has an operating income of 2.5 billion US dollar annually. So it's a bit smaller than the number one. But what's also very interesting is to see that Pernod Ricard has very strong operating margins. And this is compared to Diageo, for example. This is due to the fact that Pernod Ricard has several premier alcohol brands and practically no exposure as said, to the beer sector, which have the beer industry has traditionally lower lower operating margins compared to the spirits and wine or champagne brands. Um, what differentiates Pernod Ricard furthermore from competitors such as Diageo is they invest heavily into global expansion. Uh, for example, they are building up a huge uh, distribution network in China and in India, whereas main competitors such as Diageo set their focus on increasing their free cash flow over time to support a progressive dividend policy. Diageo, for instance, managed to increase its payout for more than 20 years, or Brown-Forman is even a dividend aristocrat, which has hiked its shareholder payout for more than 25 years. So when you look at this chart on the right side, you see the dividend history of Pernod Ricard, starting in 2002 and 2003, when the company initiated its dividend policy. Um, and it's an interesting development. You see the dividend payout amounts fluctuating quite a lot. So Pernod Ricard has been paying out dividends for roughly 20 years, but the amounts have fluctuated with the business performance, but also in line with very heavy investments the company has made for further and for future growth. So they invested heavily. And looking at the dividend history, one might say, well, in 2002, Pernod Ricard started with paying out 1.80 euro per share, and 20 years later, the payout is even lower at roughly 1.30. Granted, we are coming out of a huge pandemic. The COVID-19 pandemic has hit Pernod Ricard's operative margins and so on. But still, it's not a dividend history that would compare favorably with the one of Brown-Forman, for instance. But in my view, this would be short-sighted because annual revenues and profits at Pernod Ricard grew by the factor 7 in that time frame. So what does this mean? An increase sevenfold of operating revenue and profits corresponds to a compound annual growth rate CAGR of around 11%, which is quite significant for a defensive business in the consumer staple sector. And bear in mind, they invested heavily for future growth. So I think people interested in this company have to look a bit deeper. So for instance, from 2002 to 2021, shareholder collected around 36 euro per share in dividends. And in 2002, when the company initiated its dividend policy, the share price stood at around €30, which means that over less than 20 years, 120% of the purchase price had been returned as dividends. That's quite significant. And if you have a look at the stock price, for instance, since 2002, the stock price has increased sixfold, which, considering the cumulative dividends, results in a CAGR of 11%, which is pretty in line with the revenue and profit trajectory of this company that in that time span. So, in a nutshell, the main key takeaways, we have here a company with a broad economic moat with iconic brands. It's one of the strongest alcohol businesses in the world. We have here high earnings quality with a very clear growth path. Pernod Ricard has been a dividend payer for 20 years, but the amounts have fluctuated. It's a different dividend policy, for instance, compared to the one of Brown-Forman. Always bear in mind that it's not unusual to see with European businesses fluctuating dividend payouts. In Europe, dividend payouts tend to fluctuate as their distribution policy is business driven, which means that only a certain percentage of free cash flow, for example, usually 30 to 40% of the profits or the free cash flows are distributed to the shareholders. So the business developments and also investment requirements are passed through to the shareholders. So when times are tough, dividends tend to be lower, and in good times, in times of profit expansion, it's not unlikely to see very nice increases when these businesses are doing well. So this is to say with regard to the dividend history and dividend policy of this company. Um, with respect to the stock price dynamic, well, would say that the stock price looks quite demanding currently. We are coming out of a huge pandemic with bars and restaurants being closed, which led to a big hit to the uh, stock price in particular in March 2020. But as you can see, the stock price recovered nicely, and maybe the stock price has been run up a bit ahead of the business fundamentals. But never mind, that's the beauty of the stock market, that investors can just put great companies on a list and wait to see one day a entry price they are comfortable with. With that being said, these are my main takeaways. I hope you enjoyed this company snapshot. Thanks for watching. For more information, please have a look at www.savvyfox.com. Check out our YouTube channel. Please, if you like this video, don't forget to hit the like button, um, subscribe, and thank you very much. Bye.